Gold has seen a massively bearish week coming to close with a sharp drop and the monthly candle also closing in deep red. Now, last week in our analysis, we have seen that after the drop, couple of retracement and the breach on the downside should bring bearishness. That is what has happened, but it has gone too deep. Couple of interesting observations which has happened here is the gap filling which it has seen at 1867.70, and next now the prices are staying below the 20, 50, 100 weeks average. Now, what to expect from the month of October in gold? Is it going to continue to yield further bearish candles from here and move below 1800? Or we can expect it to retrace as the prices have not yet reached the triple bottom levels at around 1810, 1816 levels here, 1800 levels here. Yes, these are going to be the questions which we will try to answer with the help of charts followed with indicators, and towards the end I will give you the summary of the observation along with the trading strategy to adopt in the month of October. Watch till the end, listen to it carefully, and do watch the trading levels and strategy towards the end. Now let's have a look at the daily chart. On the daily charts, if you try to create a channel here, you will find that see the lows here are beautifully aligned. Hitting the bottom, we have seen it retracing, and now in fact the bottom of this channel is also coming close to 1800, 1820 zone. Yes, there is a probability that it may fail to stay below this zone. There is a very strong probability to it. At the same time, one must note, see, couple of observations. See, this was the breakout, this was the consolidation and the breakout, then the retracement. Again, the price has got the support from the same levels and we have seen higher highs. Now, this is also becoming the bottom of this channel here. So this, as long as prices respect 1800 levels, we have to be cautious, watchful, alert, as these could be one of the bottom levels from where the bounce back can be expected. But breaching below 1800, one can expect that a sharper bearish move can be expected further, which may take the prices towards 1780 and 1750 levels. Now, this is for the complete month of October. Now, let's focus on the near term. See, we have seen massive bearish candle here, and this was the most bearish move in recent terms where gold has erased 4% plus from the current levels. Also, one must observe the last two candles here, 1880 and then the double top levels at 1884 levels. These are the two levels which are going to remain critical for the near term for gold. If the prices stays above these two, I will look forward to 1900. Now 1900 is the next maximum resistance for gold on the upside. Hence, one has to be watchful of these levels on the up. Now let's have a look at the weekly. On the weekly charts, see one red candle, couple of retracement candles failing to break past the highs. We have seen this massive breakout. In the last week's discussion, we have discussed that breaking below 1900 is where the bears will take charge, and we can see more bearishness prevailing here. That is what has happened. I did not expected it to move towards 1840 levels though, but yes, these are markets. It has stressed the drop and moved towards 1840 levels. But again, I will say, first, let me show you something here why it will be difficult for gold to break below 1800. First thing is, see the resistance levels here at 1836 on the weekly charts. Very strong resistance and support existed here. Only once we have seen this breakout here with a massive move, and now it has again come to the same zone, and this also strengthens my conviction that there are going to be greater supports for gold here at 1840, 1836, 1833. Very nearby, but yes, this zone is where we can see maximum support coming into picture for gold. Below 1833, we can look forward to 1816, 1820 zone, very strong support, and then 1800 levels. Now, as long as 1800 is respected, we are not going to treat gold as bearish, because see, this was the bottom here earlier. It has to break below these in order to confirm the bearish breakout. It has to break past the preceding lows in order to confirm the breakout here. As long as this is not breached, how we can perceive this as, you can note, see, look forward to this, and You can see a beautiful flag getting formed here. So as long as 1800 is not breached now, I will not be considering gold as bearish. I have discussed this several times in my preceding analysis as also. I have told this many times in my analysis that as long as 1800 is respected, we are not going to treat gold as bearish, and I am again sticking to this for the month of October. And hence, once it stays below 1800, certainly you can say that the bears are going to take the charge for 1780, 1750. And in fact, further lows cannot be denied. So this is something you should watch out for. And on the upside now, 1900, 1920 and 1950, three major resistance will come into picture besides 1880, 1885 levels. Now let's have a look at the month. Likewise on the monthly chart, see first of all triple top, then it appears prices are willing to stay within the box here. That is what we can sense. Now box means the bottom here is at 1600 levels. Can it go towards 1600 levels, or we can expect a bounce back? Now let's find an answer, but before that let's also focus on the weekly charts here. Now note this point: after three candles, couple of retracement, first red candle, couple of retracement, and this is the first breakout candle. Now first breakout candle with a flat bottom suggest that there could be another bearish candle which could be inside here, but this is only possible, it has to stay below 1836-33 levels, and then further bearishness may prevail. Also remember, if it stays below this zone, you can at least expect half or two-thirds of this size, which suggests that at least we can look forward to 1800. If it stays below 1833, 1836 zone, certainly one can expect 1800 levels in this week itself, in the coming week itself. And it will also increase the probability for gold to yield further bearish candles here, 2 to 3 bearish candles here, taking the prices on the downside, and then in the month of November, prices might retrace again. So this is how we should look forward to this data as of now. Coming to the month. Now on the monthly chart, second consecutive red candle here. In our monthly forecast for September, we had predicted that there is going to be bearishness as long as 1985 levels are not breached. And that is what has happened. We have seen a stronger bearish move. At the same time, now I will look forward to this zone to be breached on the downside. Remember, this could be treated as the first breakout candle, and since it is closed at the bottom, this is suggested that the bearishness is there in gold, and it could lead to second consecutive bearish candle, which might take it till towards 1780 or in fact 1750 levels towards the end of the. Now if you divide the complete move of gold in two halves, you will find that these levels are going to remain certainly a very good support, and from there a little retracement on the upside cannot be denied here. So that is first part, and if it breaks on the downside, there could be couple or more straight red candles here on the downside. So be watchful, be careful, be alert. As long as 1950 now is not breached, we are not going to treat gold for a reversal. Now let's also have a look with the help of indicators on the monthly chart. See, prices were divergent from the 20 period, prices were divergent from the 20 period, prices were divergent from the 20 period. What has happened here? Converges towards the 20 period and then the bounce back to the highs. This time it has breached the 20 period, got in fact well below 50 period, and then this bounce back has happened. Now the same thing we can see happening here, and at the same time the moving averages are now at a slightly higher levels. So if you look at 18, it has breached the 20 period moving average, which is right now sitting at around 1860, and now the 50 period moving at around 1750 levels. It has also closed the month below 20 months average. Now 20 months average, it is almost close to 2 years price average, which was at 1860. It has breached those levels and stayed bearish. Now the next candle might try to march towards 1750. Possibility exists that it can yield a second red candle, taking a tilt towards the 50 period moving average sitting at around 1750 levels. If you look at the stochastic, this is looking vertically down, staying bearish. But the most important part is the look at MACD. It has crossed over here. It was staying bullish here for months. Then this sharp bearish move was seen, and then the retracement. Now, if you look at this crossover has happened after months, and again it is converged here. Now, this convergence suggests, as of now, that this will be a crossover. Now, after the crossover, the bearishness might prevail in, but then this could be just the story of couple of months or so before it looks over to another up move here. And hence, in the long term, still one can expect that there could be bullishness. However, for the month of October, there is a possibility that we may see a bearish candle taking it for a crossover on the downside. At the same time, opening flat, continuing to stay above 1880, we can also expect that this is just a conversion. It has hit a bottom and the prices will again start to fly. Why this probability is high? See, this crossover has happened after a long time, and historically, if you see this crossover, you can see this was the crossover and the highs here, staying lower for multiple years. First breakout, then the bottom, and this was the second breakout. So even if couple of red candles are seen, the chances of a up move will be very high. But for this month, you have to watch out which direction it wants to take. RSI looking downwards is staying weak and looking downwards. Coming to weak. Now also on the monthly RSI, one must note the fact here. See, it is staying for most of the time within this box. Despite the breakout, you can see first bottom, second bottom, three bottoms are achieved, and the highs are also almost at the same level. So it is staying within the box. The bottom, if it wants to achieve now, could be at around the same levels from where this rally had started at 1600. Now let's have a look at the weekly chart. On the weekly charts, now the prices are below the 20, 50, 100 weeks average. Bearish sign it is. Moving averages have started to converge. That is also one of the bearish signs. Next is, look at the Bollinger Bands. Now Bollinger Bands have started to look downwards, and these were staying with a very narrow bandwidth, and that is why after long we can see the gold breaching on the downside. Now breaching on the downside is an important observation. It is closed below the Bollinger Bands, and hence now it may try to exercise more pressure in gold by staying further bearish from here and expanding the Bollinger Bands on the downside. See, we have seen narrowing here, and hence now the expansion will take place. Stock IST is looking downwards. It may try to enter into oversold levels. Now look at MACD. MACD has seen a massive crossover here. See, twin peaks, and now it is willing to hit the bottom. That is what it appears. It is trading with divergence as of now, and this could further lead to the lows here. Yes, the highs and the lows are beautifully aligned. It is trying to create waves, and beautifully sine waves are getting created. Now the bottom, it appears that it may try to hit this zone very soon. RSI is also looking vertically down, suggestive of bearishness. Coming to the daily. Now this is the only point. See, moving averages now have started to diverge. This is a bearish sign here. At the same time, one must note that the prices are too much divergent from the moving average. Now, what could happen? See, the drop was sharper, the retracement could be smaller, where the prices might, or the moving average might come to fall down sharply. And that is why it can try to stress the drop further before retracing. Wait for the moving average to come down sharply towards 1880 levels, and then a retracement towards 1880 cannot be denied. If you look at the daily stochastic, this is oversold, while MACD is trading with extreme divergence, extreme bearishness. One must note that, see, this is how the gold has been trading: twin bottom, then the bottom, then again now trying to hit the bottom. So yes, right now the candles are increasing in size. It can try to yield couple or more red candles, take it on the downside, and then reverse from there. RSI is also staying oversold. Now RSI staying oversold here suggests that the downside could be limited. It can stretch it further. It can stretch and consolidate here for a while before looking for an up move. This also suggests that it is almost sync with our observation that there are going to be great support on the downside as long as 1800 is so achieving these lows, we can see a possible reversal. Now we have seen the charts, we have seen the indicators. Time for me to define the trading levels and strategies such that you can trade profitably in the month of October. And before I proceed, if you want to learn this art of trading, you should join my mentorship batch. The 26th batch is going to start on 9th of October. Only limited seats are available. Register yourself now itself. Reach out to me for more details. My Telegram and email IDs are mentioned in the channel and video description. Also, you can be part of my free Telegram channel to get the live market updates and my VIP signals channel for trading profitably. Reach out to me for more details on my services. My Telegram and email IDs are mentioned in the channel and video description. And before leaving the video, if you appreciate the effort, do press the like button, do share it across, do comment and subscribe as well. Your every like, comment, share, subscribe is a great support motivation for me. Let's talk about the levels to buy. First, the summary of observation. Yes, gold is staying bearish as of now. It has closed on the bearish note. On the downside, at that same time, the support levels are going to remain very, very strong towards 1800 levels. Only and only if you see gold staying below 1800 any point of time in October, just stay short. We are going to look forward to a further drop towards 1780 and 1750 levels. Yes, there is a probability to it that it can achieve these before looking forward to an up move. But yes, it only constraint here is to stay below 1800 levels, which I think it is going to provide a good support. At the same time, the chances of it to break also is going to be stronger here, because see, one bearish candle is a breakout candle what we had seen in September. Another bearish candle can be seen, if not of the same size of what we had seen in September, but uh, even if it is two-third, we can see further lower levels here. At the same, on the upside, 1880, 1885 levels are going to be the next resistances for it to break past by. Once the prices stay above 1880, 1885 levels, you can say that the bulls are trying to elevate the prices here. And then we might look at 1900, 1900, 1415 as the second resistance. So 1900 is the first, 1900, 14 and 15 is the next. And beyond that, bullishness, bulls might take over for 3032 as the maximum and 1950 is the ultimate. Only and only if prices stay above 1950 in the month of October, you can say that it is a complete reversal, and then the prices are going to give a breakout on the upside and a very strong bullish momentum to be seen. Chances appear to be less as of now, but yes, a little swings is what you can expect. On the upside, be careful of 1900 1920 zone for the complete month of October. On the downside, 1800 1780 zone in the month of October. Now with that, for the next week in October, let's look at the levels which you should trade. First, a buying entry at 1855 can be taken here, and one should wait. See, very nearby resistance is 1855, 1862, 1867, 1874 and 1880. Now, as long as, in fact, I will include 1885 as well. Now, these are applicable on the daily charts, these are applicable on the weekly charts, and these levels are applicable for the monthly charts as well. Now, this is the critical support resistance zone on the upside. Beyond 1885 is where we can see the bulls taking over. I will be looking forward to 1900, 1915, 1930 and 1950. If at any point of time prices stay above 1950 in the month of October, just stay long. Close your eyes and just stay long. It is going to fly high 1980, 85 and then 2000 levels. The chances for this to happen in month of October appears to be very, very less. On the downside, where to sell? You can sell here at 1845. Wait for 1839.5, 1836 and 1833. These are major support levels on the downside. Thus, it appears the complete zone between 1830 and 1885 is where one has to be cautious, watchful, alert. Below 1833, the major support is seen at 1821, 1816. These are the two major support zones. And if it breaks below this, I will be looking forward for it to break the previous lows at around 1808. Thus, I will be looking forward for it to achieve, in fact, 1800. Now, 1800 is going to remain a critical support. Achieving these levels, there should be retracement. If it breaks below this, sorry, one point we should consider is 1795. This is also the 61.8% Fibonacci retracement level here, and hence you should watch out for this 1795 and 1794 levels. 1794, let me put it as below 1794 there is going to be major bearishness. For 1780, 1750 and 1727. Now 1794 is something you should look out for on the downside. Very, very good support exists here. So take your trades accordingly. Trade with a stop loss. Trade with a trailing stop loss. Do like, share, subscribe, and comment. Do press the bell icon. Join my mentorship batch or signals channel. Reach out to me for any of your trading or training queries. My Telegram and email IDs are mentioned in the channel and video description. Thank you very much. Have a great profitable trading week, trading month ahead. Happy trading.